Welcome back to another P2P platform performance update, where we will evaluate the changes in the portfolio quality across some of the most popular P2P lending platforms. We will also cover important developments that may increase your risk in particular companies. As always, nothing in this video is intended to be investment advice. P2P lending is risky and you should regularly monitor the latest events surrounding your portfolio to make more educated investment decisions. In this table you can see how the industry has performed over the past month. Mintos continues to operate as the largest platform we report on that publishes regular statistical data. The outstanding portfolio currently sits at around 655 million euro with about 120 million in recovery, which is about 18% of the portfolio. The ratio of loans in recovery has not really changed compared to last month, but what is worth paying attention to for existing investors are the write-offs. If you go to the Overdue Ongoing Cases tab on the platform and scroll to the Bad Debt column, you can see that investors have already lost 12.4 million in total. A big chunk of that comes from cash wagon in Vietnam, where investors alone lost around 4.9 million euro. What makes this story even more interesting is that the owner of the cash wagon lending businesses is now raising funds for his new lenders on Loanch. We made a video on Loanch some time ago and you can watch it right here. Loanch was originally launched as a Hungarian-based platform, then recently moved to Croatia, and around the same time the platform blocked all withdrawals for some time due to issues with their payment processing provider. Today the platform offers high-yielding loans from Indonesia and Malaysia. The businessman behind these lenders has bankrupted several companies in the past, so an investment in Loanch is clearly not without risk, especially for serious investors who do their own research and look beyond cashback promos and high yields. We are also monitoring the Nera Capital case on Mintos, which is another reminder to pay close attention to where your money actually ends up. Nera lends to UK law firms that run consumer lawsuits. The firms repay Nera once the cases settle and Nera passes that on to investors. Around late March, Nera stopped paying interest on about 61 million euro worth of notes. According to the official Mintos notice, payments from the underlying law firms are delayed due to an ongoing investigation by the UK Solicitors Regulation Authority, the SRA, which is affecting a significant number of litigation law firms across the UK market. Since the cash flow used to pay investors comes from those firms, the interest payments on Nera notes are paused until their financial position becomes clearer. Mintos expects payments to resume once the investigation is concluded. A separate UK litigation funder called Nera Capital then published a statement saying that whatever is happening to the other lender has nothing to do with them, and given that timing, the lender is almost certainly Nera Capital. Sandfield also spelled out what the regulator is actually upset about. Some lenders get too involved in how law firms run their cases, and some structure deals so that the consumer ends up owning money if things go wrong. Sandfield says it does neither, which hints that Nera probably does. That pushes back against the Mintos framing of this being a broad sector-wide pause. It could mean Nera's whole business model has a regulatory problem, which is much harder to fix. The first Nera loans mature in the coming weeks. So far only the interest is paused, so principal should still be repaid on time. If it is, this is a bumpy but survivable pause. Currently investors are selling Nera notes at a 30% discount on the secondary market, which is not a good sign. If maturities get extended, the situation could get much worse. Investors should treat Nera as an elevated risk for now. Do not buy more Nera notes on the secondary market until interest payments resume. If you already hold Nera, there is not much to do but wait and watch for the repayments. This case clearly falls under regulatory risk. Some investors are also criticizing Mintos' optimistic risk scores and the cashback promos that lured investors into Nera notes. This is not uncommon on Mintos, and investors who have been around know that Mintos operates as a passive marketplace, not an active risk manager. The 120 million euro in recovery is proof of that. EstateGuru's outstanding portfolio decreased by about 2 million over the past month and now sits at around 197 million euro. Over 60% of it remains non-performing and recoveries remain slow. There's no major change to report compared to last month. EstateGuru investors should continue to expect a long and gradual recovery process, as well as further write-offs. PeerBerry continues to deliver excellent performance with 0% of funds in recovery. The outstanding portfolio grew by over 4% and now stands at around 124 million euros, showing solid growth in assets under management with stable performance overall. The platform increased its loan supply by 12.5% in April, mainly thanks to the new listings from lenders in Argentina and Peru. In May, PeerBerry expects further growth in loan funding volumes, including the addition of more loan originators to ensure broader diversification for investors. Mintos Group, one of the key lending groups on the platform, also announced that it will soon be offering loans from Brazil, further expanding its footprint in the South American lending market. InRento had another strong month. The outstanding portfolio grew by almost 11% to about 68 million euro, still with 0% in recovery. InRento has now expanded to Finland, which is another country added to the list. The platform continues to perform well across the board. Robocash saw a slight decrease in assets under management, with the outstanding portfolio now at 64 million euro, down about 4% compared to last month. Despite that, funding volume remained solid at 12 million in April, with no visible disruptions on the platform. Esketit's outstanding portfolio increased by about 5% to roughly 49 million euro, with 0% in recovery. The platform added Nimbura as new loan originator. Esketit's management also did several interviews with YouTubers over the past month. While no major news was disclosed, it clearly had a positive impact on assets under management. Afranga's portfolio grew about 3.5% to around 31.5 million with 0% in recovery. However, growth has clearly slowed down compared to previous months, and so did the interest rates, which are now capped at maximum of 12% per year. Nectaro's portfolio grew by over 5% to roughly 25 million euro with 0% in recovery. There are some changes worth mentioning here. The portfolio allocation is shifting more towards business loans to fund the development of various lending-related activities rather than specific loan books. Nectaro also recently introduced Autopilot. This is an update to the AutoInvest tool that lets you invest in whatever is available, which helps reduce the cash drag. But investors should note that this is only suitable for investors who want to be diversified across all regions and lenders the platform has to offer. Keep in mind that certain lenders or regions may be exposed to different risks than others. For investors who only invest on Nectaro, this could be an attractive option, but for investors who follow their own focused strategy and are exposed across multiple platforms, it may not be the most useful feature. Fintown's portfolio grew by 1% to around 18.3 million euro with 0% in recovery. The statistics seem stable with nothing major to report this month. TD funding had the biggest growth month over month. The portfolio jumped by almost 24.5% to roughly 10.8 million euro. There is also new information about the portfolio allocation on a platform level. Triple Dragon Funding offers some of the highest interest rates on business loans that do not fund its own projects. Most of the loans on the platform come from third-party companies. Currently, the platform still offers a 14% interest rate on loans with limited bonus campaign of up to 2% until the funding target is reached. Indemo's portfolio increased by about 3% to 27.5 million euro with around 1.67% of the portfolio in recovery. From this month onwards, we are also tracking loans with recovery timeline of more than 2 years. You can see those in our updated statistics on P2P Empire. Income Marketplace grew by about 4% to roughly 27.9 million euro with about 1.69% in recovery, which represents the loans with the category buyback initiated. Crowdpear's portfolio increased by 4% to 18.9 million with 2.08% in recovery. Debitum portfolio grew by about 5% to almost 65 million euro with close to 3% in recovery. Debitum continues to grow, and as the platform puts it, businesses use your investments to grow, acquire assets like land or forest properties and expand their operations. For investors, it is important to realize that the evaluation of forestry assets in Latvia is not easy and the risks here are real, especially if the principal repayment relies on potential refinancing options with a lower cost of capital. Also remember that Debitum tends to address scrutiny with cashback offers, so if you're exposed to this platform or think this is a risk-free investment, perhaps you should rethink your strategy. VIAINVEST's portfolio is almost flat compared to the last month at around 60.7 million euro, with about 2.9 million or roughly 4.76% in recovery. TWINO's outstanding portfolio is also relatively stable at around 47 million euro, with about 6% in recovery. The big update from TWINO's this month is the launch of TWINO Flex. This product gives you the exposure to the same Polish lender, but at 6% instead of 12% in exchange for increased liquidity. The product is a bit ambiguous though, because the actual liquidity will depend on the demand within the product category, original collateral and new investments coming in. The TWINO Flex product is also capped at 10k per investor to manage concentration risk. LANDE's portfolio grew by about 4% to 31 million euro with about 7% in recovery. We just released a deep dive into defaults on LANDE in our latest interview. You can check that out on P2P Empire. LANDE also has a liquidity product coming soon, which should be interesting to watch. Capitalia saw a 2.6% decrease in its outstanding portfolio, which now sits at 24.2 million euro with about 12.8% in recovery. recovery. The good news is that there has been a slight decrease in defaulted loans compared to last month. Insoil Finance's portfolio grew by about 1.4% to close to 49 million euro, but the default rate continues to rise month over month. Currently, around 22.7% of the portfolio is in recovery. It's worth keeping a close eye on the developments here. The entire portfolio of Reno24 is in default with no public communication that tells you everything you need to know. A few quick updates on the rest of the industry. Lendermarket announced a new product called Flex, which offers a targeted yield of 10.5 to 12.5% with an early exit option at a 50% fee from the annual interest rate. How those loans actually perform is unfortunately still not publicly shared. Lonvest launched a new lender in Malaysia, but information remains limited at this stage. Bonster, Monefit, Uvo Group, Swapper, Bondora, Go and Grow show no or limited information about its portfolio performance. As you can see, several platforms are launching their Flexi products, which promise faster liquidity at lower interest rates and little to no impact on the underlying risks. These products try to replicate the functionality of savings accounts with no governmental deposit protection schemes. If you decide to expose yourself to those products, you should keep the risk in mind. If you found this video helpful, hit the like button, subscribe for more updates, and I will catch you in the next one.